Welcome back, everyone. Next, we have ReGen III. It trades on the OTCQB under the symbol ISRJF and on the TSXV under GIII and the FSE under PN4. It's a clean tech company commercializing patented proven technology to upcycle used motor oil into high-value synthetic grade lubricating base oils. So happy to welcome the president, Mark Redcliffe. Welcome to the conference today, Mark.
Thanks very much, Anna. Really appreciate the opportunity to present today, and thanks to your team for all the work they've done in advance. Yes, I'm the president of ReGen III, and I quickly bring you to this slide just to make sure that we cover off, because we are a public company and we want you to be prepared for the test at the end on forward-looking statements. So I've been with the company for 6 years now. I joined after our CEO, Greg Clark, secured the IP and recapitalized our firm. I'm a CPA, CMA, and I'm based in Vancouver, Canada. I was initially attracted to the opportunity of ReGen III because of its financial impacts, obviously, but also its environmental impacts, and we'll get into those in a bit. Prior to joining the firm, I spent 21 years in the capital markets in various roles, including several as a venture investment banker. So our team has evolved dramatically over the past few years, and our current team encompasses years of professional experience in the finance sector, obviously, but oil and gas operations and project execution now. So presenting with me today is Kimberly Hedlund. Kimberly is also a CPA, CMA, and she's our VP Corporate Finance based in Calgary. In her previous roles, Kim was a financial analyst at Bank of Montreal, as well as Canaccord Genuity, where she covered special situations and international E&Ps. We met Kimberly while she was covering ReGen III for Canaccord Genuity, and Kimberly is a secret weapon. She wears many hats, including financial analysis, corporate communications, greenhouse gas credits, and she's now leading our response to the Department of Energy's Loan Programs Office. So we'll just move on. We hope that the following points will be your takeaways from today's presentation. First and foremost, we're a disruptive clean tech company working in the circular and sustainable economies, as Anna's pointed out. We're in the final engineering and fundraising stages to develop and build a 5,600 barrel per day used motor oil recycling facility in Texas City, Texas, to produce what are known as Group 3 base oils. Our regen process is disruptive, and we've invested tens of millions of dollars to advance the project engineering with 32 patents issued and pending globally. Our project economics are robust with 45% adjusted EBITDA margin, a relatively short payback period, and we have no reliance on government subsidies. On the environmental front, our Texas project will avoid over 900,000 tons of CO2 equivalent emissions each year versus the burning of used motor oil, while our production emissions are 36% lower than those of a virgin crude refinery making base oils. We've identified several operating acquisition opportunities where our process could be profitably integrated, and we have recently undergone NDAs with these owners. We've attracted the attention of some of the biggest companies in the world. We previously generated base oil samples that we shared with more than a dozen global off-takers. Due to the robust demand and growing demand, we ran out of samples. So in order to satisfy the balance of that demand, we ran another pilot test at Koch Modular in Q1 of this year. As we complete the additional pilot testing this week, we'll move into the final stages of off-taker outreach and negotiations. We also find our shares trading at a significant discount to our forecast project EBITDA, and we believe there is room for a material re-rate in our share price. So today you are joining us at the tipping point in our company's development. But before we move on, it's important that you understand what base oils are. So base oils are lubricants used to make passenger car motor oils, heavy-duty engine oils, wind turbine lubricants, metal working fluids, rubber processing oils, adhesives and greases, and several thousand other items that you use in your everyday activities. Base oils make up roughly 85% of a finished passenger car motor oil, with the balance coming from additives packages. Base oils are clear like a glass of water. Additives packages include such things as dispersants, antioxidants, detergents, and they're what turn your passenger car motor oil gold in color. Roughly 70% of all PCMO, or passenger car motor oil blends in North America, use a synthetic base oil or a group 3 and above. And base oils do not wear out. That's the magic here. It's the additives package that wears out and turns black. Our focus is on making group 3 base oils because our patented process allows us to do so, and group 3 commands a higher price than our competitors' products. Currently, group 3 base oils are trading at a 50% premium to group 2, hence the higher margins for our company as over our competitors. We spent considerable time, money, and intellectual capital on de-risking our project, and we'll expand on this later in the presentation. So with this, I'm going to pass you across to Kimberly.
Okay, thanks, Mark, and to everyone listening today. So through our Texas project, we're addressing 3 key sustainability problems in the lubricants industry. The first is the environmental impacts of the more than 800 million gallons of UMO that's burned or dumped each year. So through our Texas project, we expect to divert approximately 10% of this and reduce CO2 emissions by over 80% compared to burning. The second issue is outdated re-refining technologies, which are unable to economically produce the synthetic grade base oils that consumers and auto manufacturers now demand. The last issue we address is the massive domestic shortfall for Group 3, where we see growing demand for Group 3, but a reliance on international supplies for over 75% of our requirements. As I mentioned, there's 800 million gallons of UMO burned or dumped each year in the US. So where is all of the UMO or used oil going? Looking at the life cycle of the 1.4 billion gallons generated each year, a full 28% is never collected. Now, some of that goes to garage heaters, but 750,000 gallons a day, or 20% of all UMO generated, is believed to be dumped into the environment or incinerated, which is incredibly toxic for air, water, and soil. A scary stat is that 1 gallon of used oil can contaminate 1 million gallons of fresh water, or roughly 1 to 2 Olympic-sized swimming pools. Moving down the value chain, we find that 72% is collected, but of that, 2/3 is processed into fuels or re-refined to vacuum gas oil. This leaves only 32% of oil collected, or 23% of all used oil generated, that's re-refined back to a base oil. So why do we lose so much in this life cycle? Well, these losses really come back to economics, where the operating or capital costs to collect and re-refine are simply too high. Depending on oil prices, UMO is often considered a liability to many oil change providers. We plan to address this outdated paradigm through our innovative process, which I'll outline on the next slide. So this is a high-level view of our patented process. Like most re-refiners, we have 2 common stages. That would be distillation and hydrotreated, denoted as number 1 and 3 on the flowchart. In the distillation stage, we remove heavy asphalt bottoms, metals, and contaminants and produce a VGO, which contains the lubricant molecules. In the molecular treatment unit, number 3 on the flowchart, the VGO from the distillation process would normally be upgraded through an energy-intense hydrotreatment process. What makes our process unique is the additional solvent extraction stage, where we cost-effectively pull out 53% Group 3. From there, a much smaller volume of base oil from the second stage is sent to our hydrotreater, where it's upgraded from roughly a Group 1 to a Group 2+. The one thing I want to stress here is that solvent extraction is not new to refining. There's no special equipment or rare materials required for our process, and our process designer, Koch Modular, has over 60 installations worldwide. That said, solvent extraction is new and novel to re-refining because we've built a moat around this technology through our suite of global patents. Okay, so shifting gears, I'm going to touch on the last issue that our technology addresses, which is the market dynamics for Group 3. At $10 billion a year, Group 3 global market is characterized by high growth rates and almost no sustainable sources. Through our advanced re-refining process, we believe we can capture a huge untapped market and take advantage of 3 exciting tailwinds. The first is the shift to the circular economy. Around the world, we're seeing a ramp up in extended producer responsibilities, recycling and circular material mandates, and emission disclosure and reduction targets. As a result, we see that lubricant producers, blenders, and traders are all on the hunt for sustainable materials to reduce their Scope 3 emissions and meet stricter regulations. However, re-refining rates remain low, especially for Group 3, where less than 0.5% of UMO in America is upgraded to a synthetic. At ReGen, we believe we can become the poster child for the circular economy within the synthetic lubricants market. This leads me to my second key tailwind, the shift to synthetics. So over the last decade, consumers and auto manufacturers are increasingly choosing or requiring synthetic grade motor oils in their vehicles. And this is because synthetic oils are better for your engine, they provide better fuel economy, and they extend your oil change intervals. The impact of this shift is that demand for Group 3 is growing at about 7% a year, as shown by the gray bars on the left-hand chart. This brings me to the last key tailwind, which is onshoring, where COVID-19 highlighted global supply chain risks. Looking at the bar chart, you can see a huge gap between North American supply and demand. This means that North America imports over 3/4 of its Group 3, as I mentioned earlier. And looking at the stacked blue and black charts, you'll also notice there are only a couple larger producers contributing to the very limited domestic sources, which clearly creates supply chain risks. When our Texas project comes online, we expect to be the second largest Group 3 producer in North America, as shown on the pie chart. And in doing so, we'll make up 9% of the overall North American supply and displace up to 11% of carbon-intense imports. So obviously some fantastic sustainability benefits, but the economics also matter, and this is a key differentiator for us. This slide provides a look at our margins on a retroactive basis per gallon of base oil produced. With 53% Group 3 yields, the dark blue band represents our margin advantage relative to producing a Group 2. So over the last 10 years, this has averaged just shy of $1 per gallon, but has reached highs of nearly $2 a gallon. So as you can see, we expect higher, more stable margins throughout the commodity cycles versus a Group 2 producer with comparable costs. So to cap it off, we have a project that's incredibly good for the environment. Our process is 99.7% less toxic versus the dumping of UMO, and we can have a major impact and address 10% of the UMO burned or dumped each year through our project. Secondly, we generate exceptional economics. Our innovative process means that over 53% of our output can fetch a significant price premium, and as such, we expect to generate adjusted EBITDA margins 3 times that of our lubricant peers, which are currently trading at about 12 times their forward EBITDA. So with that, I'll pass it off to Mark to tell you more about our Texas City project.
So to appreciate the current value proposition here, you have to understand the de-risking steps we've taken to date and our current operating environment. A 5-barrel per day pilot plant was built in Texas and run for 6,000 hours. In 2017, we secured the initial intellectual property suite. Each of the 3-stage processes that we use are in use in multiple refining facilities around the world, but not in our proprietary configuration. Since the end of 2017, we've spent more than $21 million advancing engineering and expanding our patent suite to 32 process patents issued and pending globally. We completed 3 pre-feed studies with Stantec, WSP, and Koch. And in 2022, we completed FEL 2 as well as value engineering to update the project costing in a highly inflationary environment. Our project costs are known and current, and we are technically validated. We're already working with some of the largest firms in the world, including Koch, Advario, PCL, National Bank Financial, Raymond James, and Northern Trust. We're building our business against the backdrop of a growing demand for greener lubricants and more specifically growing global demand for Group 3 base oils. We're one of the only re-refiners in the world who can make synthetic Group 3, and we will be the largest Group 3 re-refining facility in the world once commissioned. On the feedstock front, we've signed LOIs and drafted contracts for up to 66% of our project needs, and we're working on up to 150%. On the offtake front, we're under NDA with several super majors, and global blenders. We previously shipped Group 3 samples to them, and we'll be shipping more samples to newly identified off-takers imminently. We've received test results back from many of them, and we're already exploring next steps with them. Some of these parties have also reflected their interest in participating in non-dilutive project-level financing. On the financing front, we hired National Bank Financial to oversee our Greenfield, Texas City financing process, and will continue to enter into due diligence NDAs with the financial entities that they have identified. We also hired Raymond James as a co-lead to oversee brownfield project valuation and funding to accelerate our path to cash flows. In March, we were invited by the Department of Energy's Loan Programs Office to submit a Part 1 funding application, and we've been responding to their review questions. We received an indicative terms presentation from Export Development Bank of Canada for $108 million. We're not reliant on government subsidies. On the greenhouse gas credits front, we do not include any revenues from greenhouse gas credits in our forward projections, and we are actively advancing the file. We hired GHD Services to conduct 3 life cycle assessments to quantify our plant emissions and the emissions we'll help avoid by recycling UMO. We recently completed a feasibility study with Clear Blue Markets to quantify our greenhouse gas credits that are suitable for voluntary carbon credit monetization. And we continue to work with Northern Trust, with 15 trillion of assets under management or administration, on the build out of their voluntary carbon credits trading platform. So first off, a 5 barrel per day pilot plant was run for 6,000 hours between 2005 and 2009. We then took the pilot plant data and completed 3 pre-feasibility studies using these world-class engineering firms. Our 3-stage suppliers, being Duke Technologies, Koch Modular, and Studi Technology Progetti, have also installed their units in numerous facilities around the world. Additional vendor scale testing has since been completed by our 3-stage vendors, and we wrapped this technical work inside 32 process patents awarded and pending to protect our collective investment. So the Texas City site is located in Galveston Bay on the West Coast. It is a former Dow Chemical site owned and operated by Advario, a private, family-owned, multi-billion-dollar terminal services operator. The site is permitted, and it is ideally located along major rail lines and highways, and it has deep water access. Advario will handle all on-site logistics for us, so we can focus on what we know best, re-refining. The market for base oils is global, and sales are not confined to a small perimeter around a specific facility, as you find with biofuels and renewable diesel. We have placed markers on this map to show you the locations where we have received approaches from for the installation or licensing of our ReGen process. We're actively working 4 paths to monetize and commercialize our technology. The first, build to own, as you see in Texas City. Second is acquire existing vacuum gas oil and base oil re-refineries for retrofit, which is faster and less capital intensive than a new build. Third is joint venture with existing re-refineries and refiners. And the fourth being a license our patented process outright. So the near-term drivers and catalysts for this firm, first, we're finishing up our pilot testing at Koch Modular this week. We'll take those results and update the off-takers that we're already under NDA with. We'll then ship physical samples of our products to these off-takers for their in-house testing. As mentioned, we've already received test results back. We've also received 1 offtake LOI recently, and we expect to continue to advance on several others immediately. The offtake will drive FEL3 engineering or feed engineering, and that in turn will drive project financing. With financing in FEL3 in hand, we hit the final investment decision. As a recap, we've taken a multi-pronged approach to the de-risking and building ReGen to where you find us today. We have proven our plant yields with the completion of FEL2 or pre-feed and pilot plant and multiple vendor scale tests. Our 3-stage vendors have installed their technologies in numerous sites around the world. We are technically validated, and we have 32 patents awarded and are pending to ring-fence the investments made to date. The project has an adjusted EBITDA of 45%. Our Texas City Greenfield facility payback period is less than 5 years at current prices. CapEx and timing are both drastically shorter on brownfield retrofits. We're not reliant on government subsidies. Greenhouse gas credits are blue sky to our economics. There is a growing demand for Group 3 globally, pushing the market to $10 billion annually. North America is structurally short Group 3 base oils and imports roughly 75% of its annual needs from the Middle East and Asia. We will help fill this gap while providing security of supply. There's also a growing demand for greener products. Our Texas facility helps to avoid more than 900,000 tons of CO2 equivalent emissions each and every year. Greenhouse gas credits quantification, validation, and monetization partners have been identified in GHD Services, Clear Blue Markets, and Northern Trust. We've spent more than $21 million since late 2017 to advance engineering and patents. We're in offtake testing and negotiations with several super majors, majors, and global lubricant blenders. We're working with National Bank Financial on Texas City project financing and with Raymond James for M&A and retrofit opportunities. We've received indicative terms from Export Development Canada for $108 million. Our Phase 1 application is currently under review by the U.S. Department of Energy's Loan Programs Office. We have solid world-class partners in Koch, Advario, PCL, National Bank Financial, Raymond James, and Northern Trust. National and international opportunities exist for other plants. And with this, I will put you back to Kimberly.
Okay, thanks, Mark. Just a quick overview of our share structure. We have 118 million shares outstanding, or 138 million fully diluted. And I would note that we've got a strong following in Europe, which I think speaks to the green attributes of our project. We're currently trading around a $40 million market cap, which is a fraction of our Texas project's projected EBITDA run rate. The management have been active buyers in the market and now hold over 20% of shares outstanding, in addition to the over 9 million options priced at about 75 cents a share. So management is clearly aligned with shareholders and motivated to deliver. So just to wrap it up, our 3 key takeaways. We have a disruptive process with exceptional economics, like I said, 3 times the EBITDA of our peer group. We have a sustainable and circular solution at a time when industry participants are looking to lower their scope 1 to 3 emissions. And we're at a tipping point with numerous potential near-term catalysts and a stock that's trading at a fraction of our projected EBITDA. With our peers trading at 12 times EBITDA, we see significant upside as we continue to knock down milestones in our growth strategy. And with that, I'll pass it over to Mark and Anna.
Well, again, thanks very much for your time today, everyone, and appreciate your interest in our project. We recognize this is an awful lot of information to digest, and so now we should probably go into questions with you, Anna.
Great job, both of you. Thank you so much. Yeah, let's see how many we can get through with the time we have. Briefly, talk about the purpose of the Koch modular pilot study. I know you mentioned it, but what is the purpose of it?
Sure. Well, several. The primary reason that we went and entered into this pilot study recently was that the off-taker demand for our products, our base oils, were higher than expected, and we actually ran out of samples. So we needed to produce more samples. The secondary was we wanted to confirm the historical technical work that we've done, but also we wanted to utilize current feedstocks. We wanted to validate feedstock properties. We wanted to check on the yields, which are coming out higher than historical tests and work that we've done. And we wanted to independently confirm the American Petroleum Institute properties of our base oil products, which we have just completed this morning. And they are better than they were 5 years ago. So the results are higher yields and better quality products with a higher viscosity index, which is great.
And what is your general strategy?
From a financing standpoint?
Mm-hmm.
Well, the first is to secure project level financing. Our goal is to avoid dilution as much as we can. I mean, a lot of us on the team have come from the capital markets. We recognize that you can quickly blow up a cap stack. So our goal is to stick to where we are and do this at the project level or utilizing convertible debentures at higher prices.
And do you think there might be quicker routes to first revenues than building a greenfield project in Texas?
Absolutely, yeah. And that's why we've taken this multi-pronged approach. In addition to the Texas City facility, we've already identified several M&A targets. And by M&A targets, I mean assets, operating plants that we can go in and retrofit with the help of, well, obviously financing from our bankers at National Bank and Raymond James, but bringing in that second stage from Koch Modular. Our ability to retrofit, we can do anything to any existing re-refinery out there. And that's primarily because of the money we've spent on our technology to date. We can also continue to run those existing facilities, so we're cash flowing while we're completing engineering on the second stage and the actual tie-ins. Probably require a few weeks to a month to tie in and restart the facility. But that's really, that would encapsulate a downtime for an annual maintenance contract on our refinery. So we have a quicker project timeline for both first revenue and revenue from a Group 3 project that's already in existence. We're very excited about these opportunities, and we're under NDA with 3 of them now.
And why should our viewers watching this consider buying the stock?
Yeah, I can take that one, former securities analyst here. So I think there's some macro trends that are in our favor. The shift to circular materials is obviously a big one, and we're seeing a lot of demand for our product just because there is no supply out there. As I said earlier, synthetics are becoming, big in the lubricants industry, and will be the largest sustainable provider once we're up and running. So that market for Group 3 means that our economics are fantastic. We've got lots of milestones ahead that can really move the stock. Offtake really sets everything in motion. We start to advance our FEL3 at that point, and it certainly doesn't hurt our LPO application either. We're also looking at uplisting in the US at some point. And then I think it really just comes down to valuation. So as we execute on our project and knock off these milestones, I think we'll start to get the value from that project. So investors can look forward to a re-rating in the stock as we start to tick off those catalysts and milestones.
Thank you, Kimberly. Mark, do you have any closing remarks for our viewers today?
Just to thank you very much for the opportunity to be here. We really do appreciate your interest. We would encourage you to reach out with follow-on questions, because I'm sure we didn't get to everybody today, but we're an open book. We're happy to talk to you. We encourage you to reach out directly. Don't go to the chat rooms to discuss us. Come to us to discuss us. All right. And thank you very much.
Wonderful. Thank you so much. Thank you both for joining us on our conference. And we look forward to following along with some updates in the near future.
Great.
All right, everyone. All right. Thanks for watching. We'll be right back with our next presenter.